All right, let's get right into it. Today, we're going to pull back the curtain and look at the framework professionals use to read the market's inner monologue. This is all about volume price analysis. We're going to move past the noise you see on price charts and learn how to decode what the big institutions are actually doing, how the real game is played. The legendary trader Jesse Livermore absolutely nailed this almost a century ago. The market's operating system, what drives it, fear, greed, supply, demand, that stuff is constant. The patterns keep repeating because, well, human behavior is predictable. The tech gets fancier, but the game itself, it stays exactly the same.
So that brings up a really important question, doesn't it? With all the amazing tools and instant data we have today, why do most retail traders consistently get wiped out? Well, the answer, if you look at it through the VPA lens, is that they're playing the wrong game. They're watching the scoreboard, but they have no idea what's happening on the field.
Okay, so the first thing you have to accept, the core idea behind VPA, is that the market is not a level playing field. It just isn't. It's an arena that's really operated by and for professionals, what we call the smart money. Our goal isn't to beat them at their own game. Our goal is to see what they're doing and simply trade alongside them. Think about it. These insiders, the big funds, the market makers, they're sitting right at the center of everything. They can see the entire order book. It's like they have a complete real-time map of all the supply and all the demand. That's not just a small edge. It's a massive structural advantage. They know where all the money is, and that's information you and I will never see.
An analyst named Richard Ney put it perfectly. He said to think of these specialists like merchants. Their business model is incredibly simple when you break it down. Buy inventory at wholesale prices, then turn around and sell it to the public at retail prices. That's it. That is the entire game in a nutshell.
Okay, so if this is their business model, how in the world can we spot what they're doing? Well, this is where traditional analysis falls short. If you're only looking at price, you're just seeing the result. To understand their intent, you have to analyze the force that created that result in the first place. And this is the critical distinction. Price shows you the result, the car crossed the finish line. Great. But volume reveals the effort. It tells you how powerful the engine was that got it there. So price tells you what happened, but volume starts to explain why it happened, and, crucially, with how much conviction. And this, right here, is the absolute heart of volume price analysis. Look, price can be manipulated pretty easily for short periods, but significant volume, that cannot be faked. It's the undeniable footprint of institutional money moving in or out of a market. It's how we track their true commitment. Now, these ideas are built on Richard Wyckoff's 3 universal market laws. First, supply and demand. That's pretty straightforward. It dictates direction. Second, cause and effect, which means big moves don't come from nowhere. They need a period of preparation. But the third one, the law of effort versus result, is the one that's absolutely crucial for us. The price move, the result, has to be backed up by the volume, the effort. When those two are out of sync, that's a huge red flag that something's about to change. So Wyckoff figured out that these insiders don't just trade randomly. No way. They run these carefully planned campaigns to first accumulate assets at a low price and then distribute them at a high price. Let's walk through what that cycle looks like. The easiest way to think about this is to picture the insiders running a giant warehouse. To make a profit, their first job is to fill that warehouse with inventory, and they need to do it at a very low cost. Once it's full, their job flips to emptying it out for as high a price as possible. So how do they get all this stock on the cheap? It's genius, really. They use bad news. A terrible earnings report, a market scare, anything to create a wave of public selling. As the herd panics and sells in fear, the smart money is on the other side of that trade, just quietly absorbing all that supply at bargain bin prices. That's the accumulation phase. Then, once their warehouse is stocked to the brim, the whole story changes. Suddenly, it's all good news and media hype to create a feeling of euphoria. As the public, driven by greed and the fear of missing out, rushes to buy, the insiders are systematically selling their inventory to them at massively inflated prices. That's the distribution phase. And this cycle happens over and over again on every time frame. Okay, so that's the big picture, the grand strategy. But how does this actually look on a chart, bar by bar? This is where we have to zoom in and connect the macro story to the micro execution, reading each candlestick not by itself, but always in relation to its volume. This is where we get into the nitty-gritty of reading the tape. We're looking for those moments when the effort just doesn't match the result. For example, if you see a big, strong-looking price move up, but the volume is super low, that tells you there's no professional muscle behind it. Or the opposite, a tiny price bar on gigantic volume, that means a huge battle is happening, with massive selling pressure absorbing all the buying. These mismatches tell the real story.
So what does a real, healthy breakout look like? It's all about harmony. You see the price breakout, that's the result. And it's confirmed by high, and even better, rising volume. That's the effort. When you see that, it tells you the pros are on board and are committed to this new price.
But now, let's look at the opposite, and this is what catches so many people out. You see price breaking out to new highs, but the volume is weak or even falling. This is a massive warning sign. It's a classic trap designed to suck retail traders in right before they pull the rug. Volume is the ultimate lie detector here. All right, so these principles show up on the chart as a few key signals you've got to watch out for. Stopping volume, for example, is a huge spike in volume during a sharp drop, which often means big buyers are stepping in to absorb the panic. Or no demand, where the price tries to rally but on pathetic volume, showing there's just no real interest. These aren't just random patterns, they are the real-time signs of those accumulation and distribution campaigns in action.
Now, I have to be really clear about this next part, because this is where most people go wrong. VPA is not some mechanical if this, then that signal system. If you treat it that way, you are going to lose money. It's a way of thinking, a framework for reading the market's story. The number one rule, and if you take nothing else away from this, remember this, is that context is everything. I'll say it again. Context is everything. A high-volume bar by itself means absolutely nothing. Its meaning comes from where it happens. Is it at a major support level after a long fall, or is it at a new high after a massive run-up? The story, the context, is what gives the volume its meaning.
So let's talk about the traps people fall into. You want to avoid these at all costs. Don't just trade every high-volume bar you see. Don't ignore the trend that came before it. And please, don't think VPA is going to give you some magical price target. It doesn't do that. It simply tells you about the strength or weakness behind a move. This takes skill, not just following rules.
You know, when you start thinking this way, something interesting happens. You don't trade more. You actually trade less, but you do it with so much more understanding and conviction. The goal isn't to find more setups, it's to be way more selective and only get involved when the story that price and volume are telling you makes perfect sense. So, I'll leave you with this question. Are you going to keep chasing price, just reacting to the effects on the surface? Or are you ready to start learning how to read the causes underneath? The footprints of the smart money are right there on the chart, written in the language of volume for anyone who's willing to learn how to read it.